Recording in progress.
Hello, everybody. It is me, once again, the economistic, aka Steven. I'm here with another video. So, I actually made a new video last Saturday, but I made a mistake when I was sharing my screen. And after an hour and 15-minute long video, I uploaded it to YouTube and I pushed it out there only to watch it back and realize that I did not share my screen correctly. So I basically just deleted that video, pretend it didn't happen, and here we are today. We have a little bit more action in the markets, as well as a few headlines and a few things that I want to point out and draw your attention to. So in today's video, I'm going to go over some, as always, some trading tips, some of my flow when it comes to looking at charts, observing patterns, because once again, I will always emphasize that there's no one indicator, no one chart pattern, etc., that will give 100% confidence of the move of an asset. So I'm going to be going into a recent trade that I made. I borrowed e-gold from a new platform on MultiversX called Jewelswap. So we're going to take a quick look at that. We're going to see how you can leverage Jewelswap to borrow e-gold. And then I actually took all of that e-gold and I swapped it over to ZoidPay. So ZoidPay is a project that moved over to MultiversX over a year ago at this point, and they have a huge roadmap, promising future. And there's also an interview of the CEO on my podcast, Multiverse Experience. I'll tag that in the link below. So while you're checking out that link, go ahead and drop a like, subscribe, leave a comment. Let me know what you like out of these videos, and please interact with the videos. And I just want to say thank you to everybody who has been giving me, lengthy replies. Because it's fun to see that people are actually watching these videos and interacting with them. The hope for me is really that I just put things out there and I provoke thoughts. So of course I have my own personal ideas, but really my hope is not that anything I give on these videos is financial advice. It is non-financial advice. You're watching Not Your Financial Planner on YouTube. That's the name of this channel. So I'm not your financial planner, but I'm still going to be here to give you some education, some tips, etc. So with that being said, I'm also going to get into some tools that I have been using for months and maybe even years for my tracking process. So tracking and also, price analysis and all that good stuff. So I want to make this video shorter because I keep saying it. I'm going to make videos shorter, but the next thing you know, we're into the hour and a half mark, and I just, I'm all over the place, unorganized. So I just want to keep this video simple, straight to the point, give you what you want, and then you can look forward to seeing me on the next video. So make sure you hit that subscribe button. Let me know you're there. Love you so much. So let's get into it. I'm gonna go ahead and share my screen right now. Fingers crossed that I share the correct screen this time, because again, that was very disappointing the other day when I shot this whole video and then it was like, oh my gosh, it's on the same screen the entire video. So there was just like, it was a little bit sad. So go ahead and drop a like on this video because this is basically like 2 times of a video. Anyway, you get what I'm saying. Here I am on Twitter. Follow me over at the Economistic if you so desire. These days I've been focusing a little bit more on just retweeting other content creators out here and so forth. Also there was a important conversation that while I'm here seeing this, I'll go ahead and shout it out to you. Yesterday morning, I had a live Twitter discussion with Easton Gladney, sorry, and a few other people, specifically Crypto Gems. Which if you're in the ecosystem, you might know best crypto token. But yeah, basically we had some beef, so we talked it all, we hashed all of it out, and as you can see over here, I'm following him and he's following me. So we made out, we're not made out like kiss, like we made up. That's what I'm trying to say. Who knows? Maybe next X day, Crypto Gems and I will make out, but I'm straight, so I mean, I'm going to leave the conversation at that, and that's completely irrelevant to this video. But yeah, shout out to all these content creators, especially Andre. He every week he creates these threads that is basically, a compilation, a thread of threads. So I want to give a shout out to Andre over here. Every week he follows or he shares all of the best threads, as it says very blatantly here. So I'll go ahead and drop a link to this as well. Because yeah, Andre also posts some awesome threads himself, and as you can see, it makes it easier to find some different threads. So let's just real quick, just like go over to MultiversX Twitter. Not to say that the Twitter account is the first place that you should be looking for your headlines and so forth, because to be honest, I mean, I've had this idea, whenever I see people on Twitter or otherwise, upset, like, oh, the team isn't working fast enough, the team isn't communicating enough, XYZ. Consider this idea that, most importantly, we're on a bleeding edge industry. And on top of that, this is, these are Twitter accounts of, the team members and the team itself. Twitter is going to be full of a lot of different content. Some of it will be announcements, some of it will be progress, but some of it will also just be some of these people just, talking on Twitter. So I think that if you are finding yourself getting impatient, just think about the idea of what if you only got your news from multiversx.com/blog. And so basically just the idea of cutting out all of the noise and really just focusing on these big headlines as key points to focus on when it comes to tracking the progress of Multiverse X. Because I know, if you go over to Multiverse X or if you check out Lucian or Benjamin's Twitter, you might be kind of disappointed, like, oh, we don't care about this stuff. Like, just give us the news, just give us the updates, like XYZ. So if you're on Twitter, I mean, I would just encourage you to take things slowly and kind of with a grain of salt, just because, again, this is bleeding edge technology, and Benjamin and the team have given out loose dates in the past, only for those dates to, kind of be changed or moved or whatever. So as always, I'm kind of lenient on the team, giving them a chance to really just, prove to us what they are building. Not to say that it's okay to build in silence. I think that's key. It is extremely key and important to communicate with your investors, with your audience. And I just want to point out once again that during the town hall, I guess this is three things now that I'll tag in the description below to rewatch the town hall, wherein Benjamin discussed this idea that the team is shifting from the verticals within the team to shifting the outward focus, this a world tour, of marketing, rather, a world tour of marketing. And included in that thought, he expressed that there's going to be more attention given to shareholders of the different verticals within Multiverse X. So looking forward to seeing what exactly that is. But also too, I've got a poll that is live right now. Basically, I saw somebody who made a poll on a very short audience, 43 votes here, and this person polled 53%, saying that MEX and xMEX rocks. So I wanted to just kind of do this myself with a larger audience, larger poll, to see how things are feeling. And right now, I mean, like, even though the majority of people seem to think that MEX is a thumbs down, I think it's close. It's close enough, but altogether, if you're watching these videos, odds are that you know a good amount of Multiverse X, and you know why MEX might be very controversial. um and I just want to emphasize, I'm not going to get into it in this video. You can watch my videos in the past, check the descriptions, because I have each of the chapters labeled, and I have a lot of thoughts that I put out there about MEX and xMEX in the past. I'm planning on doing a specific video deep dive on the MEX story from before it launched, to launch, to whenever they switched to the DEX 2.0 economics. Just, I mean, I feel like a big video just giving the whole picture would be valuable for people who maybe don't know all the details, but also for new people coming in, questioning what the heck is MEX, what is all of this, what is the history, what is locked MEX. So right now it's a close battle, with most people erring on the side of it sucks. But as I said, go to old videos and listen to what I have to say about that, because all I'm going to emphasize right now is that odds are that MEX and xMEX is more valuable if you are providing liquidity on X exchange. If you are just holding locked MEX, or if you are hoping for a future to trade MEX, or of course that third big one, if you're waiting for some key usage utility for the MEX token within the MultiversX ecosystem, aside from just being a generic cryptocurrency that can be swapped peer to peer. So if you're a liquidity provider, you're gonna use your xmex energy to boost your farming rewards and your meta staking. And then of course I want to emphasize that xmex owners, energy owners, also receive meta bonding, which is automatic diversification among 9 different projects, which is putting out an APY of 20 to 25%. So yes, you maximize your energy by locking it as long as 4 years. So naturally, it should be no surprise per se that locking for 4 years yields a greater return, versus if you were to stake Eagled, getting 9 or 10%. There's only a 10-day unbond period, and that Eagled, you can take it out, it can be liquidity. So I think that it makes logical sense for xmex energy to put out a little bit higher APY to make up for that requirement of you're locking your investment for 4 years. So on top of that, I think another huge key point of xMEX energy is a period of time we have not seen yet. xMEX is associated with the X exchange, and as we know, over these past several months, MultiversX has been releasing its rebrand and dropping new products. So in previous videos, I mentioned that it states that xMEX energy is going to be incentivized for the X Launchpad, which X Launchpad is the platform built by MultiversX that gets new tokens onto X Exchange with their token listing process. It starts with the lottery, and lottery winners have a higher chance of winning the more Eagle they have staked. And it's also noted that energy is going to be a part of that equation as well. So we do not have any answers with regard to how energy is going to be included in that equation. But the specific one that I meant to bring up was the fact that xexchange.com states that the X Money platform, you will be able to use you'll be able to use MEX on the X Money platform, which we know will be the cards, debit cards will be through X Money, through TwistPay and Utrust, both acquired by MultiversX, but X Money is their platform. So that's kind of like the big question. But yeah, so again, I went a little bit deeper in there just to give you some information in case you may not know anything about xmex or mex. Mex is the token. If you lock it, it becomes xmex, and you get basically an equivalent amount of energy. It's kind of this multiplier that gives you more benefits and more utility. So I think the primary use of xmex, the use rather, not the features, but the use of xmex is boosting liquidity provider positions on X exchange. So naturally, as a liquidity provider, I'm going to put more value, rather I see more value in xmex, because it's literally boosting my rewards by over 20%. So if you're just holding locked MEX, or you're waiting for MEX to be useful and you don't have liquidity, or you don't have very much liquidity, and all you're seeing are like fractions of pennies being added to your account through meta bonding and fees, like you're probably not going to be like, oh my gosh, yes, xmex is so valuable, I'm so bullish. And then I guess I also wanted, and this is the last thing I'll say about xmex, I promise. But yeah, and then the big thing that I wanted to mention was that xmex energy gets a percentage of fees. So pretty much all swaps on X exchange will give the energy holder a piece of those fees based on the fees over the past week. So in a world where multiverse X gets adopted, X money basically grows into and captures a part of what MultiversX has stated they believe is a multi-trillion-dollar industry that they're tapping into with Web3 payments through X money. In the world of a multi-trillion-dollar industry, if you can capture a piece of that, my friends, that's all I'm going to say. What do you think? Where's the future heading? And obviously, there are a lot of macro events, world events, unexpected things that happen. But I don't play the what if game. I do myself the most that I can do to just like Multiverse X is positioning themselves. I want to try to position myself and keep myself exposed as often as possible to the greatest extent as possible, even though that is an extremely risky profile. I just see this opportunity, and I said it in that Twitter space yesterday with crypto gems, that I invest aggressively in cryptocurrency basically because if it all goes to zero, I believe in myself more than I believe in Multiverse X. So if everything shit hits the complete fan and my entire portfolio goes to zero, it's like that was hella fun. I'm still young. I've still got a lot of life to live, and you know that I'm gonna keep on hustling till the day I die. So right now, I'm just trying to figure out, trying to see if my investment in cryptocurrency is going to continue to be able to grow. AKA, is the bear market over, or are we going to see prices continue to fall from here? So in a world where we are in a bull market and the foundation has been formed and found, and we're basically like moving up from here, I'm feeling very good with where my portfolio is at. But again, the position timing is so key. The reason that I am okay right now, and I've been okay through this past bear market, as horrible as it has been, with prices falling 80, 90, and with, you know, the MEX token falling 98, 99% in value. The reason that I'm able to sit here and feel comfortable with where I'm at is because I, in 2017, 2018, 2019, and even 2020, I guess 2021 as well. So through that period of time, I was buying and I was holding, I was accumulating. I was not waiting for prices to go lower. I was not scared for prices to go lower. I saw this as an opportunity, and understanding that whenever people are running away, when people are fleeing, and this is again, I want to re-emphasize the fundamental principles of trading: buy into weakness and sell into strength. Doing the opposite feels right, but doing those things will be the best thing you can do for your position. On the other hand, you know, when you see a huge green candle you want to buy, like we'll get into in just a moment, ZoidPay has been doing very well. It's up 60% off of recent lows against Eagled, and I just took out a $5,000 loan using my Zoidster NFTs as collateral, threw it into ZoidPay because I am taking a gamble. It is a gamble. Do your own research, not financial advice, 100%. We'll get into it in just a moment. But yeah, so I was able to establish my position, and dollar cost average, you know, averaging out the cost of my position within the market between, I mean, 2017, 2018, 4 years, 3 or 4 years. And it's not easy to do that, folks. Like I said, you see a huge green candle go up and your brain says, I want to buy this, you know. And then you see like a red candle going down and you say, oh, I want to sell. And that feels right. Whenever you see a loss, you want to, you want to remove exposure. Whenever you see a win, you want to increase exposure. But what are you doing when you do that? You're either, selling into weakness or you're buying into strength, and that is wrong. Again, it's not a promise, it's not surefire, but I think it's one of those bullet points that I would tag as the key, check marks to box whenever, or boxes to check, excuse me, whenever you're considering adding to your position or making a trade. You've got your classic: don't invest more than you can afford to lose. Don't buy all-time highs. Buy into weakness, sell into strength. So we got 4 things right there that I hope you'll begin to remember and identify. Not to say that you must follow these rules. I obviously do not follow them myself. Do as I say, not as I do. But if you're thinking about making a trade, if you can at least stop for a moment and go through all of those boxes, hopefully the hope of going through that list and asking yourself each of those questions will really just get you to reintroduce to yourself the idea of risk. And whenever you really start to direct your attention on the risk that you're either increasing or decreasing, just calling attention to risk and stopping for a moment rather than just, oh, I see something, I'm going to move, I'm going to trade, I'm going to move money, I'm going to do the thing, and then I'm going to be good and I'm going to hope it all works out. It's like, just like breathe, like slow it down and think about things, because anytime I've done that, more often than not, I've basically reduced the amount of money that I was going to move, and I either did half of that or even a smaller fraction of that. And why is that beneficial? Well, it's always, I think, beneficial to hold some dry powder or some capital, some money on the side, so that if you do make a right move, you did execute a trade and you're capturing some of that growth. But if you leave some money on the side, it gives you the opportunity to feel better about the risk that you've bitten off. And then of course, if you do make a bad trade, you allocate some money to a trade and it goes downwards, if you put 100% of your money into that trade because it was a quick, I hope this works out type feeling, and then it goes down, well, I mean, there's nothing you can do at that point. If you're fully exposed 100%, the only thing that you can ever really do is sell. And again, you want to sell into strength. So if you were to sell into weakness, obviously you would just be, you'd be exposing yourself to you'd be realizing losses. So that's one side of doing 100%. But if, you say, oh, I'm just going to do 50%, I'm going to do 50%. Well, if it goes up, you feel good and you still have that 50% on the side that you can either, continue to kind of dollar cost average into whatever this asset is, or more specifically, and if the price goes down, you won't feel as bad about yourself because you kept 50% of that as dry capital. So you feel better about yourself because you could have put 100% in, and then you would have just you would have felt 100% of that loss, whatever it was. So you'll feel better about making a more calculated decision, and then also you'll have dry powder. So that gives you, of course, the opportunity to add more to your position in the case that that asset does happen to fall. So those are two really useful ways and a few helpful tips whenever it comes to trading. Buy and hold long-term strategy. I don't necessarily recommend trading because again, you can get washed up. You can play the I'm chasing a move game. But yeah, so I guess you can go ahead and join this poll, vote, let us know what you think. But I was actually scrolling down here because I wanted to at least just draw attention to this tweet that I made on Sunday, which I quote tweeted Lucian talking about this X exchange upgrade for the xMEX energy. Smart contracts can now hold energy. So I have already in previous videos, I kind of walked through this tweet that I made the other day that explains the added utility this brings to the xMEX token. And here is what I was referring to a little bit earlier about how the X Money platform down here, X Money platform is supposed to be associated with MEX, as well as the X Launchpad eligibility. So scrolling to the top, you can see that this thread that I wrote was in response to the upgrade that Lucian is talking about, basically unlocking two key capabilities for xMEX energy, energy DAO, and auto compounding. I'll leave a link in the description for you to read through this because, this is a video. You can read through it. And I've said it in I've talked about it in previous videos already. So I, let Lucian know that I included that tweet in this thread. But yeah, I basically asked 4 specific questions derived from that thread. you know, this maintenance enables xMEX energy to be held in smart contracts. So my primary question was whether the update was needed in order to pave the way for MEX pairs on X exchange. As we know, MEX, the Meyer exchange token, I'm not sure how long. Let me know in the comments if you know, or if you have a quality source or screenshot. But we have been waiting for new pairs on new liquidity pairs, including the MEX token, for months and maybe even years. I mean, it's the clear expectation for a decentralized trading platform. Whether or not MEX is included, we need to see some new pairs like Bitcoin and Ethereum and some others like BNB at least. I mean, like these are just at bare minimum. So I call out four different things that I've noticed are at xexchange.com, but they have not been implemented yet in the new tokenomics model. And then beyond that, since I wrote a little bit here, I went ahead and included, a better understanding of what the use of decentralized exchanges and DeFi can give you access to. And you can see, these are all color coded color coordinated according to whether or not they're on X Exchange or not. So X Exchange, as we all know, is pretty flippin' basic right now, which I think is great. I think is positive, to have X Exchange, a decentralized exchange. It's community owned, like, and it's decentralized, it's self custodied. So to me, that is just baseline. I'm okay with where X Exchange is at. But then bringing back into the picture, well, we got X Exchange in December, and now it's, halfway through April. And I mean, we got a cool UI, like a user interface upgrade, and of course, the DEX 2.0 economics model. That was a long time coming, and we were very happy with that. And I think that I am still very satisfied with what we've got. But at the same time, I need to, as a community leader, acknowledge the fact that there are some missing points, I guess, on just like the X exchange. Those 4 points which were included in the original governance vote. I think those are super key that we see some movement on those. Though I do speculate in this post that this might have to do with X money. It's like, will Dex leagues have anything to do with X money? I also talked about how MEX will it be required in the X launchpad? And then again, I specify again, will MEX play an integral role in X money platform beyond basic fundamental value of what a cryptocurrency does, aka peer-to-peer transactions? Like if X money drops and MEX is just like any other token, it's like, okay, I mean, that's awesome, but that doesn't give us utility beyond what every other cryptocurrency in the world can do. So I'm really hoping that the team will make some changes that really send a message to multiverse investors and stakeholders that yes, we thank you, liquidity providers, for bootstrapping the X exchange. Even though, again, people like me, I already find a lot of value in the MEX token and xMEX energy specifically. But it's obviously going to help out everybody if MEX can actually, using the metaphor of a gear among all these different gears within the ecosystem. Imagine if MEX was placed as a gear to crank many other gears, and without that gear, other gears will not turn. That's what we mean. That's what I mean whenever I say MEX needs demand. MEX needs a utility that if you want to turn this gear over here, you need a MEX gear to come in there and start working. So I mean, it's just something that we're all kind of waiting for. But at the same time, given that MEX is a community token, there does stand the chance that perhaps the team will continue to upgrade X Exchange, and you would certainly hope that that will come with it advancements in the tokenomics of or rather the use case or utility of energy, especially considering it's a semi-fungible token. These are just, it's codable money. It's coded money. So really the future, or rather the potential, is limitless. And the fact that we're still sitting around here twiddling our thumbs wondering what's up with the MEX token, when are we going to see some of these things come to fruition, it just leads me to Really, I feel like it's got to be something. It's so blatant that it's got to be something. So I'm very eager to see how the rest of year 2023 will unfold, given that X Worlds has been pushed towards quarter four, quarter three, as well as X Fabric, X Launchpad, and X Money. So we've got four big things as well as an X Day. We've got X Day 2023 to look forward to. And yeah, we'll see. Where will we be in December 2023 with the MEX token? Um, but all I do know is that by the end of 2023, we will be past the worst of the locked MEX unlocks for the MEX token. So that's just, going to be objectively positive, just to stop the bleeding. Not that it really matters, but I just want to see whether these new tokenomics of mechs are really starting to take form and take shape. But right now, because these locked mechs unlocks on a monthly basis are coming in, I mean, think about it. We technically have, this hybrid season where year one was pure mechs emissions that were diluting the price. But with year two, we now have a new economics model for freshly emitted MEX tokens. But we also have, some leftover year one tokenomics economics still impacting the price, right? Because locked mex, it was a year schedule. So even though we're in the second year of x exchange, because locked mex from last year is unlocking, we're kind of in this in between ground where we're not 100% on a new page of dex tokenomics, and we're still partially digesting through the year one. So we're kind of maybe in a 3 or 4 year timeline, we're bleeding into a growth stage where we can get and we can rather put behind the first year tokenomics and start to see if the value proposition of MEX can actually incentivize holders. But anyway, I've definitely said quite a bit there. Let's go ahead and jump into something else here, which I guess I'll just go ahead and pop over to the Bitcoin chart, just to give a quick little update on where we are with that since the last time we spoke. So I mentioned in the last video, and I'll reiterate this again, that in bear markets, the buyers are the ones that get pain, and then in a bull market, the sellers get pain. So what I mean by that, as if it really needs to be explained, this was a bull market. I'm sorry, this was a bear market. So anybody that bought here, anybody that thought, oh my gosh, this is a reversal, I'm going to buy here, they got wrecked heavily. And then, honestly, same concept over here. Anybody who bought through these ranges, because of this capitulation event here, buyers were punished. That's what I meant to say. So we have a bottom here, potential 4-year cycle bottom for Bitcoin around $15,500. And so now the paradigm kind of, or not the paradigm, but the question shifts to who is getting punished in this market. And as you can see here, that even if you're buying at local tops, and then again here buying at local tops, you are net positive given just the trend of the market. On the other hand, so this questions us, if buyers are winning and sellers are getting punished, then that leads me to believe that we might be in a macro trend change from this bottom. And again, just to emphasize that, what do you mean, Steven, whenever you say sellers get punished? Well, what I mean is that people that sold down here thinking that price was going to plummet farther, if they were out of position or if they were selling, then they get punished. Why? Because the price starts to grow and they're out of position. So what do? They start to get fear of missing out, and then either they buy here, or they continue to wait. Or maybe the idea is that the sellers, who were out of position down here, do buy back, and then they start to see price reverse and they sell only for the price to reverse higher than it was previously. So this has happened a series of times here where we've had what would be sellers punished. And even here on this little one here, this was a massive freaking move, up to the 26,000 level, that dropped down to here. And given that huge move, one would expect, or one could expect rather, that perhaps this level down here should be retested. So again, sellers getting punished means they sell at the sign of weakness only for price to move higher. And in this idea of them getting punished, they will get punished the most if they had bought the pump. So if they FOMOed in, bought the pump, they sold because they thought the price was going to go lower, only for price to go higher. So they're buying high, buying into strength, and then selling low, selling into weakness, and then price pumps higher. I've gone over this a few times in past videos, but I just want to continue to reiterate that because it's really evident to see this, and I think that this is very constructive for a case of the bull market returning. And then in the last video, I definitely mentioned this concept, and I spoke about some price action that we actually kind of saw over the past couple days, even though this is the first time I'm rediscussing it. In the last video, I talked about how, yes, of course, it would be great if we just mooned, if we just like started to move up off of this consolidation level, which consolidation level meaning this area where price consolidated and then broke out above. So at that point, this breakout basically would communicate to any reasonable investor with some experience in trading, anytime there's a breakout, it's like odds are pretty high that it's going to be retested. So in the days after this breakout, we did see a steady climb, and then over the past couple days, we actually did see a decline here. That if you see that horizontal line that I'm drawing here, this retest retests the extent of this move before it consolidated and broke higher. So this goes to show that resistance, which at this point, whenever price came upwards and was attacking at this level, attacking upwards, we got resistance coming down. So of course, resistance in a bear market is, it works hand in hand. But here you can see that this resistance was basically disqualified whenever we broke out. So anytime, every time you see resistance break out, basically this becomes a question: will this area be support? Is this area truly supportive? Yes, we got support on the way up that led to a breakout, but that doesn't really matter. Again, it's all about the retest, and that's why it's really key, really important not to buy into strength, and because if you're to buy into strength, you're not buying these areas of support. You're buying a new region that has not truly been confirmed for support or resistance quite yet. So I just don't like the idea of bringing my emotions into the game. And whenever you buy high, you're basically your basis is that level. So of course you want it to see higher. So anytime you see the market start to go down from there, given that your cost basis is zero, it's like a fresh sheet there. And if you start to see the price go down, in comes fear, in comes doubt, in comes questions of, ultimate pain. And those are intimidating and those are scary. And people will give into those feelings and sell out at the worst possible times, which is basically what happens whenever you get washed out of trading. Which is, again, why I, for years, bought and held, accumulated, rather than day trading or swing trading, trying to increase my amount. I just focused on increasing revenue streams and maintaining exposure and compounding interest along the way. So boom, those are 3 keys to being successful as well, that worked for me. These aren't rules because they worked for me, they're rules because they work. The issue is it's very challenging to follow the rules, and again, they're not really rules. I don't think I like the word rules, but they are kind of rules, and they're very challenging to follow because I mentioned already, buying into strength feels right, selling into weakness feels right, but those are actually completely contrary to your success in trading. Whether your trading is a long-term, multi-month, multi-year process, or if it's short, it doesn't matter if you're buying or selling in the short or long term. So I'm not rewinding, but I'm coming back to the Bitcoin chart here. You can see that we had a retest. And what does this mean? This means that this resistance is now being, it was retested to confirm, the price comes back down once it breaks up and out of this area of resistance. This means that we've got support here. So now, in order to really call and stamp a seal of approval on this entire range, basically being supportive, which we'll call that about $28,000 level, we need a retest. We need some fear. We need some selling to come back into the market and basically encourage people to sell if they're not bullish. So basically that's what support confirms or denies, is whether the money that was is the money that is situated in the market, is it rock solid, or is it unstable. So whenever price starts to go down, and retest these areas of what once was resistance, but because it broke out, leads for the case that this could be support. Once we get those retests and once we get confirmation of those, then we can be more confident that yes, these regions of consolidation were in fact supportive. um, but we are not there quite yet, I would say, because as I mentioned, in the 2023 season, we've had many periods of time that we had pumps and then price falling, only to grow higher than it once was, and then dumps, and then the same sort of thing. So in order to really kind of, for me to stamp a seal of approval on this area being support for Bitcoin, thus sending a bullish indication to the market to risk on into crypto, I think that we really need to confirm this with a higher high. So right now our high is near 31K, but I want to move this to the daily really quickly and just keep it simple. Right now, we have a bullish engulfing pattern, which, as you can see here on the right hand side, that green daily candle has engulfed the entirety of that previous red candle, which was only 3% drop. But as you can see, the length of the red has been replaced by the green, which basically once again drives home that idea of sellers being punished. People who may have bought these wicks, maybe bought this top thinking, okay, I was on the sidelines for too long, I need to get back into the market because things are going to go higher. It's like, as soon as people start to feel, as soon as bears, I should say, as soon as bears start to feel the price is going to go higher, it's basically at that point we can expect for the market to start to retrace. It's a weird psychological phenomenon. But yeah, for bears that were maybe unexposed or just didn't think that this previous area of consolidation was going to grow positively, maybe they waited, maybe they even leverage traded or margin traded, and perhaps they sold, perhaps they bought, whatever. But the fact that we came down over these past couple days and we retested that previous level of resistance gives me pretty solid satisfaction at this point. Just considering, I would give that like 30% confidence that we're supportive here. This is not financial advice to begin with, but considering that the majority of people don't take that seriously whenever somebody says this is not investment advice, that's why I'm adding to this that 30% confidence. Because even though truly it's probably for me a little bit higher because I'm macro bullish, um, I think that it would be nice to, maybe get another retest of that range, not just a retest of this resistance we saw, but get yet another retest of the support here. So getting another chance to come down and see if again the market confirms that yes, we are buying here, we are buying dips, the market is bullish. If you're selling dips, you're getting punished. So let's just delete all of these drawings. Thank you again for listening and being a part of these videos. I really enjoyed sharing these thoughts, and I really hope that these will bring you to learn, to open your mind, to provoke some thoughts, and ideally, one way or another, even if you follow or don't follow what I say, I really hope that this conversation, though one-sided, is still giving you some areas to improve yourself, to learn, to check yourself, and to keep yourself balanced. So altogether, Oh, and then I'm just realizing off the top, while I'm looking at this, this is now the 6 hour chart, and I already told you that that this downturn reversed, and we had that bullish engulfing. But now, even on the 6 hour candle, we're seeing another bullish engulfing pattern, which leads me to believe that altogether, I mean, I think that I'm still confident, having confidence rather, that we are bullish here. The fact that we got a bullish engulfing candle that did retrace only for price to quickly come back. And I mean, boom, just like that, we're at the same level, the same exact level that we were all throughout this sideways chop. Even though we got a little bit of a trap here, traps are only traps if you fall into them. So the fact that we got a little bit of a downturn, only for price to reverse, and now we're literally at the same level. This to me is a very bullish indication. So I'm gonna put this to the 3 day, just so you can see this in the wider context. That again, this is a very key moment for Bitcoin to let us know where the market is going, because given the market has grown so much since late December, early January, from $15,500 or so. It's like this idea of the bigger they are, the harder they fall. And yet another reason that I say don't stay on the sidelines, don't wait for bear or bull market confirmation, because if you're waiting for confirmation, I mean, like, for goodness sake, at what point are you going to see that confirmation that we're in a bull cycle? Like, to me, I think that the confirmation is going to come if we see a big bullish advancement very soon here. I would say by the end of April, into May. We're waiting to see, and I'm bullish. So I'm really expecting for some positive growth to retest into the $35,000 to $40,000 areas. But in just a moment, I'm going to show you some indicators that, again, indicators are not a tell-all. They are not perfect, but you can see through those indicators that in fact, the underlying sentiment of Bitcoin, I'll just bring it up right now. I don't know why I'm saying, oh, in a moment I'll say this and talk about it. I'm just trying not to get too distracted. Um, but and finish my thought. But then it's just better to just, if I can't be organized, then I should at least be consistently unorganized. And whenever I get off topic, I at least finish that thought. But I've got some people in the responses in the comments letting me know that they appreciate it. So thank you for just sticking with me, and not needing per se to have everything organized and perfect and clean. This is how I like to express myself. This is how I like to talk and discuss. Thank you for being here. Drop a like. But yeah, so check it out. So the relative strength index, as well as the moving average convergence divergence. So both of these indicators are in fact momentum indicators. Momentum meaning, basically, where's the trend? We're looking at a weekly chart here right now. So these are going to be pretty indicative of larger trends, either confirming or denying. And I think it's really interesting, because, and this is going to present a little bit of a bullish side to the market, that the according to these indicators, if I was to go over here to November 2021, where we were seeing Bitcoin at $69,000, just check it out. Look down below at the relative strength, and you can see that the overall strength of the market is at the same exact point that it is, it was in the same exact point that it is right now. So here we are in April of 2023, and we are actually, the momentum is actually stronger than it was in November of 2021. So that's something to note. And then this is what I mean whenever it's like no one indicator can give you complete clarity, because there's this idea of, on one side, and I think the first side is this bullish idea that, looking at these indicators, oh my gosh, we're as bullish now as we were in 2021. Like, that to me is a positive indicator, considering where we're moving out of this bear market. We're as bullish as we are, not by price but by momentum right now, versus back in 2021, like wow, like there must have been a significant change in momentum through this bear market that gave us this strength to move in such a powerful way, bullishly. Um, and that leads me to believe, the trend is your friend, right? That's another classic kind of term. The trend is your friend. So right now, I think that all indicators are blatant in showing us that we are bullish right now. But that's a cause for concern, because the idea of markets is also, the people that are present, engaged, and trading, they only have so much dry capital. So I mean, ideally people are generating their own revenue so that they can put more money into the market, which is always that uncertainty. We don't really know where people's money is situated. But the big question is, and getting to the bull or the bearish narrative is, all right, we've had such strong momentum that, as I just said, is that of the last bull market, where we have just as much momentum as we did in the past bull market. So that leads me to believe, okay, like maybe the market is exhausted, maybe the bull rather is exhausted, maybe, there's now time enough, price has the price has risen enough that now would be the most damaging time for people to be buying. um, and again, for people who are just buying and holding and dollar cost averaging, you don't have to worry about all of these thoughts and stresses, because you're just exposed to the market, and you're going to buy some high, you're going to buy some low, but because you're consistently adding, you're just capturing the average of the market. And that for me is a very safe and very comfortable place to be, because if you're trading, you're looking at this market, and relating back to what I said about this previous resistance that we've seen. So in the previous bull market, we had these areas of support, that were able to fuel us to higher highs, except for here, but it was still support. So these areas were support, bringing us the possibility to move higher. So because these areas broke, that means that this trend line here should represent psychological resistance. And that was a clear break of support at this huge massive wick back here over during the last summer. And then I mean, this was a huge dagger just down to the bottom after that FTX capitulation event. That's just been brutal. um but it was at one point supportive, and now price is slowly but surely gravitating back to that region. So there are two things to take note of here, that because this is an area of confirmed support turned resistance, I think that there is a good case to be made, that this could be a reasonable time for the bull to be exhausted, for the bear to come back and to give us a little bit more grief, reminding us of the bear market that we were just out of. So no matter of growing or bullish momentum changes the possibility that we could see a lot of negativity come out of nowhere, and even a lot of selling come out of nowhere. So in a future video, that thought actually reminded me of some Bitcoin data that basically showed that the number of dresses holding Bitcoin over the past couple months has simply exploded. I think that has a lot to do with the bank's insolvency and the banking system, global banking system right now, that even though things are silent and everything seems to have blown over, I think that enough people are coming to the idea that banks can't really be trusted, and to self custody your own money, XYZ. So I think that just the bullish case, the bullish like societal case for Bitcoin is starting to be realized. In addition, we see the idea that a momentum shift has occurred here, and then I spoke about it in previous videos, but I'm going to bring it up again just because we're here. That these Bollinger Bands, representing standard deviations of a moving average, will begin to tighten whenever price is trading at a narrow enough range. So we know how volatile Bitcoin is. It's almost a matter of when Bitcoin will become volatile once more. So the fact that the bear market led these Bollinger Bands to come here and pinch, um, over the bear market is very indicative that we have a long-term reversal afoot. And then it's very powerful to see that the Bollinger Bands, in fact, pinched at the $24,000 level mark. So literally $10,000 above the bottom last year. We're already seeing some movement out here. So the fact that these Bollinger Bands truly have not really been as tight as they were um, since, I mean, pre times that Bitcoin was barely even popular. The fact that Bitcoin and crypto is so popular to these days, it retraced a great deal. You know, the amount that it retraced and the time that it took to retrace, and now we have these long-term indicators that are revealing to us a trend change. Really gives me a lot of confidence that the market is bullish. So how bullish is the big question? And observing these Bollinger Bands, I think that the reason, or the fact that they've pinched around the $24,000 level, I've said it in previous videos, leads me to believe that this will be retested in the future. But I think that we have a little bit more to. I'll just leave it modest. I think we have a little bit more room to grow. And that's to say the very least, because I'm so bullish. But again, I encourage you to buy and hold, accumulate dollar cost average and compound interest. I'm not saying to buy. In fact, like I really don't think that you should buy. Because again, we've gone up so far. You know, there's this chance. There's always a chance that another micro or semi-long term downtrend could take shape for reaccumulation, and reaccumulation tends to retest previous levels of consolidation. So in the event that we're just going to become incredibly bearish, um I would see the range of 22,000 being retested, getting maybe a bounce here, maybe even a bigger bounce to come back up here and retest. And so I mean, either we could move sideways for a great deal of time, or we could move with volatility, come down and retest. I think that history has showed that we should expect for this bottom to be retested, maybe not all the way down to 15.5K, but I think at least to this middle Bollinger Band on the 2 weeks. I think that that would be just a modest expectation for where Bitcoin could retrace to in the event, not in the event, once it starts to retrace, once Bitcoin becomes a little bit bearish again. I think that I would look. This was that drawing that I just did. That was for the 2 weeks. But as you can see on the weekly candle here, we're getting a little bit more of a steep pattern out of that middle Bollinger Band. So not anything too crazy has happened in Bitcoin over the past really week or so, excluding, of course, this breakout above this consolidation level. That was great to see, of course, but now I'm personally waiting to see if we are in a macro extremely bullish trend. And what are we waiting for? Like I said, we're waiting for retests. We're waiting for a higher high. So that was a very long analysis over Bitcoin price. I'm really not sure how I always spend so much time talking about charts, and I literally barely even took a breath, and it's been 30 minutes. I want to, before I close out of charts altogether, I want to just come over here and take a quick look at some of the top performers in MultiversX. So I am on arda.run/charts, one of the DeFi platforms on MultiversX. They offer this pretty cool chart that allows you to analyze tokens and sort by liquidity, sort by their 24-hour to 7-day difference versus e-gold or versus US dollar. So I like to start here. Of course, I like to click over here, and I value e-gold probably higher than the majority of these assets. So I'm always interested in buying tokens that are appreciating against e-gold, because that's going to earn me more e-gold. Before I start to consider those gains too seriously, I must, this is kind of some non-financial advice, but it's advice nonetheless. that because this screen here is all based off of X Exchange. I want to remind you that X Exchange is a decentralized platform, which means that it is funded by people bootstrapping, funded by people giving their liquidity to the exchange, and swaps are taken care of by what's called an automatic market maker. It's a simple algorithm that takes in an input, the amount of liquidity within the pool, and then it spits out an output. And slippage is how much percent the price will fluctuate based on the swap that you've initiated, and that's all reliant on how much liquidity is in that specific pool. So if I come over here and I sort some of these tokens by either the best or the worst performing, I think that it's pivotal to come over to this tab and acknowledge how much liquidity some of these tokens have. Because the lower liquidity, the less money it takes for a swap to move the market. You can see here that that this just happened. S star just popped up as one of the best movers over the past 7 days against E Gold, but it has $11 of liquidity. I do know that many of these tokens are traded with greater liquidity on other platforms than X Exchange or Jungle Dex, which is the more open version of the X Exchange. But small liquidity means it takes a little bit of swap to move the market in a very big way. So the fact that S star is up past 7 days with $11 of liquidity gives me very, 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 very little confidence in the validity of that move. I mean, I think that before you consider that, I mean, the fact that it only has $11 of liquidity should be indication enough that it may not be a very popular token. And even looking at the majority of these tokens on Arda.run, another top performer only has $1,000 of liquidity, and then some more over here still have under $10,000 of liquidity. And I think that you need to define for yourself what you believe to be a sufficient amount of interest from investors, from retail investors, and not just retail, but institutional as well. But to me, all that to be said, that the amount of liquidity is going to play a role in how much confidence you should play to these increases. So again, I want to emphasize that while we're looking at this, you might see this chart and see, oh my gosh, like ZoidPay has been doing so well, I'm going to buy it. But in reality, I think that you should consider the possibility or the idea. And I would actually used to do this all the time back when I was looking at new tokens to add to my portfolio. I would go to CoinMarketCap and I would sort the entire list based on the losers, because based on this, this is now what this chart is sorted by, is the tokens that have done the worst over the last 7 days. So what does this mean? This means that these tokens are weak right now. And what does that mean for what I mentioned earlier about buying into strength, selling into weakness? It's the opposite of that. So that means that's a positive indication. I know that it can get a little bit tedious, but it's very simple. That if you're to buy into weakness, sell into strength, you're altogether you're just you're residing with the strength of whichever side you're on, buying versus selling. So obviously it's always key to include tokenomics, because here's the MEX token, one of the worst performers. But again, if you're a liquidity provider, you might see this as an awesome opportunity to add more xMEX energy to bolster the rewards that you're getting on X Exchange. But yeah, so this is useful to see which tokens have been doing the best over the past period of time, and also the worst, because just scrolling down here, it's like Proteo has solid amount of liquidity, but over the past couple 7 days, it's been showing some weakness. So it's like, okay, like I want to think more about that. Let me open up the chart. Let's take a look. And at that point, Yeah, I mean, like to me, this does not look very good, like at all. I mean, over the past more than 7 days, price has been falling pretty badly. And then just probably my go-to indicator is just the moving average convergence divergence, which gives a very clean look at just where the momentum is in the market, as well as whether or not a reversal could be afoot. So moving this to a larger time frame, um, that looks a bit intimidating, this Proteo Eagle chart. And this is a lot of it is just kind of intuition. You can see here that the MACD is also bearish as well. So this is nothing on Proteo. That was just an example that I saw. One of these biggest losers over the past several days with some significant liquidity as well. So, excuse me, holy cow, you hear that burp? It's disgusting. Mm. Dang. All right, it's been over an hour of nonstop talking. How do I do it? I don't know. But thanks again for watching. Drop a like if you're still here, of course, and you have not already. Um, but yeah, so Arta.run, I want to finish up just by showing you some other features. Those charts I already showed you. They have audits of different protocol or projects within MultiversX, and then also too they have what I think is pretty cool. You can pop in your wallet address and it'll show you exactly what your portfolio is looking like. So this is the liquidity pool on X exchange that is currently showing me for some reason. I must have clicked it at some point. Um, but I think it's kind of fun. I mean, you can input your own wallet address and it'll give you your assets value listed, and you can change it to the US dollar. You can change it to e-gold. You can click down and, if your wallet has many more positions in it, of course, it's going to show all of those. But it gives you more insight with, how your portfolio is looking, both from a standpoint of US dollar and e-gold. And then I'm not connected. You can connect your wallet, and by doing so, you can actually use this to swap tokens. So I believe Arta recently integrated with Swap, which means that you can do stable swaps on Arta, which of course is thanks to Swap. Um, so it looks like we aggregate the liquidity of 3 decentralized exchanges, Swap, X Exchange, and Jungle Dex in order to find the optimal route for your swap. So Arta is very simple, but very powerful. So shout out to Arta. And then while we're here, some other tools that I really like to use, some other websites that I want to shout out and show to you. Here we have ecompass.io. So this is not a DeFi platform, since you can't do swaps or anything on it. But this is a very good resource, excuse me, for MultiversX enthusiasts. So I might get more into some of these things and some other tools for enthusiasts, but given this video is a little bit more focused on the market movement, I just want to focus on some of the tools it has for tracking different assets. As you can see here, all of the main tokens are listed with 30-day, 15, 7-day performance, as well as some smaller time frames that you can see there. So this is another place that you could analyze and to kind of figure out which tokens maybe are a little bit weak, which would be good to maybe add a little bit to your position, or what tokens might be doing good. I mean, do your own research and do your own, have your own strategy developed. So pretty exciting to scroll through here and just see how many tokens are building and quickly see green versus red, how these tokens are competing against each other. So I thought that there was a map, like a ESDT map, that basically color coded all of the ESDT tokens. Maybe if I scroll down, it's there. But yeah, so this is really useful just to give a broad look at the MultiversX Ecosystem, you can see that the overall market cap of MultiversX is we'll just call it $1.5 billion. And these charts break down each of these different categories into core, ecosystem, community, or experimental. So some of these tokens you might find on xexchange.com. But other tokens are on a little bit riskier platform called Jungle Dex. It's the same concept as X Exchange, but it's a little bit easier for people to get in rather than the traditional formal route through MultiversX, and especially through X Launchpad. And the price or the token listing process is for basically the top tier projects that are brand new on MultiversX. So on top of this, though this really needs to be not corrected, but updated. This was the MEX supply in just year one, and these pie charts here show you how much has been distributed, excuse me, burned versus circulating supply. I'm really not sure if this is updated regularly. But it is useful to see. It's fun to look at and see how much MEX has been burned and how much of that came from withdrawal penalties versus the transaction fees. So on the side also has a way to navigate through each of these, and each of these have combined charts of the e-gold as well as US dollar. So this is another interesting page that I'll just touch on while we're here on eCompass, which is you can look at all of the validators on MultiversX. You can see how much they have staking. You can see how much e-gold people are either adding or taking away from their staking. I think it's very fun to look at this and see all of these metrics, because it's very I don't even know. I mean, it's not. Oh, page is unresponsive. It's not that useful, but I think that it's just fun to see that this ecosystem is actually alive. It's being fueled by all of these people, and there's real stuff kind of happening behind the scenes. So it's given me some trouble here. So I'll leave that up to you to check out on your own time if you'd like. And the last thing for today that I want, oh, it did show up. So as you can see, Binance is a staking provider, and many others too. You can analyze, see, compare, and yeah, just kind of take note of that. I think that's just more cool rather than it is an actual tool for you to utilize. But the last thing I want to mention on eCompass, well, of course, I want to encourage you to head over to eCompass and check it out, because you might find some tools that I missed in this video that you still use and find to be useful. You can also go over here to special charts, and it actually shows the dollar value of liquidity provider tokens on X Exchange. So that's kind of fun to look at. It because liquidity is one-to-one parts of, in this example I brought up, the UTK liquidity. So basically this is what this movement of this chart is dependent upon is basically the aggregate move of e-gold and UTK, since this is a liquidity provider token. But yeah, I think this is fun to look at just from a perspective of analyzing the liquidity provider token as an opportunity rather than UTK individually or e-gold individually. This is going to give you a look at how much basically how much a liquidity token is worth. So yeah, that's one last thing that I wanted to mention here. But of course, on the side here, we have lots of other stuff that you might find to be useful, like I mentioned. So I'm going to close out of that. And I'm going to basically just end today with what I mentioned at the beginning about ZoidPay. ZoidPay bridged over to MultiversX and over a year ago, and they've been doing a lot of exciting things. And they recently received $75 million in funding. And they've recently also moved into a brand new office space, released a roadmap, which can be found on their blog. And then recently, I noticed that Edward Onishi is talking about real utility or APRs of up to 36%. So something is definitely brewing behind the scenes with ZoidPay. Not to mention that they have been talking about a tier one centralized exchange listing happening in the month of April. Beyond that, overall, many people seem very interested in ZoidPay, and more people are seeming to be interested. Especially as you can see here, the super app is coming from ZoidPay. This is basically ZoidPay's equivalent of the X Portal application, which is going to be fueled by their platform, which includes their shopping pools and their Zoidster NFTs. So ZoidPay is not owned by MultiversX. ZoidPay is a separate business company entity with its own book of business that is building on Web3, and they are basically touting this idea of being the liquidity layer of Web3. ZoidPay has been in the news. Rather, it's been in the headlines for a while now. We have a lot of things to look forward to. Here are some videos of their new office. Let's come over here and check out the charts. You may have already seen it, and of course I already mentioned it at the beginning. Over the past 7 days against eGold, ZoidPay is up 60%, but against US dollar it is up 70%. So for those ZoidPay holders, congrats to us. But as I just mentioned, quickly breezed over there, there's a lot going on within ZoidPay that is very bullish, very exciting, and all of that is magnified in the event that Bitcoin can become bullish. So Bitcoin being bullish would of course lead investors to be more risk on and putting more money to cryptocurrency versus holding it on the sidelines, etc. So just quickly looking at ZoidPay, let's just zoom out to the monthly time frame. Just zoom way out. I'm gonna open up my indicators here, such as volume and the Bollinger Bands, which on the monthly time frame are not yet visible. So again, now on the 2-week time frame, and we can see that the Bollinger Bands are pinching around this, and this is ZoidPay versus eGold. So that's also very important. Again, we noted on this chart that because it's performed 60% against eGold, since eGold, the US dollar value has also been apparently doing okay. That is basically translating to a net further increase when we consider the US dollar of ZoidPay. I want to bring down the time frames a little bit just to zoom in a little bit more. This whole previous run was more or less whenever the ZoidPay team launched on MultiversX, and they also did one of their first lotteries, or rather their sales for their shopping pools. So shopping pools are fueling the liquidity of the ZoidPay platform, and they demand you to stake and lock basically a certain amount of ZoidPay. And those also have a time lock associated with them. Excuse me, a time lock associated with them that will increase your APR as well as give you different benefits as well. So the price has definitely taken a strong downturn. But over the past couple weeks, we've seen that the moving averages have been able to come here and start to move bullishly amidst all of this bullish news from eGold. So especially on the 3-day chart, you can see that price pinched around this period, and now price has really started to move aggressively out of this range. The Bollinger Bands are now expanding, which is not indicative of future growth or anything. All it means is that right now price is bullish. Right now price is expanding. So now just zooming into the day, you can see that very clearly, prices expand, or prices consolidated around this range and is really starting to move up and out. So this is extremely bullish. And I just wanted to comment on what you see down here. So this volume translated to essentially overnight the volume of ZoidPay increased almost 1000%. And this was very interesting for me as a price, as doing when I'm doing price analysis. You know, volume is indicative of attention, not interest in from a standpoint of how much interest I'm earning, but how interested am I? How much are people interested in ZoidPay? Are people following ZoidPay? Are people trading ZoidPay? Whenever you see volume go from what it was about $100,000 average to at these peaks, it was averaging $1 million of revenue on not revenue but trading volume on X exchange. That's going to lead me to have questions. So I'm still disappointed to say that I received so much negative feedback about me asking questions about this volume increase. But I am people were calling it FUD, but it's like, yo, like I have a shopping pool and a lot of Zoidsters, as you'll see in just a moment. Well, actually, technically, I have none because I lended them all. But I have a shopping pool, I have Zoidsters, and I have in my trading account, I have ZoidPay. I'm exposed to ZoidPay. Oh, and I totally forgot to mention that WAND, WAND, is ZoidPay's token that they are calling their degen token, and they have this alchemy lab that's in the works, which is going to include their NFTs. It's going to include ZPay and this WAND token to basically, come together as an alchemy lab that gives users, different benefits, different perks, and so forth. So really excited, extremely excited for everything ZoidPay is doing, and that is why I'm exposed to ZoidPay. That's why I've bought it in the past. And I mean, I'm just very interested in what ZoidPay is doing, and I'm very bullish on it. So whenever I come in here and I see volume acting abnormally, I mean, I'm bullish on ZoidPay, but I'm still going to question it. Edward Onishi, CEO, came out and let us know that this volume was basically driven by ZoidPay itself doing tests on some of its SDKs or APIs. So that's great that ZoidPay is continuing to push and to grow and develop. But my question is really just an opportunity, both as myself as a community leader, to be careful about the way that I frame things and be careful about framing things. If people respond to my tweet and they say, oh, the reason prices, or rather the reason that volume is increasing is because they're getting a tier one centralized exchange listing and they need volume requirements. I saw that from some ZoidPay fans, and I just included that in the possibilities, and then I retweeted it and I repurposed that, basically framing this as a question: is this volume being fabricated by ZoidPay so that they can get a tier one centralized exchange listing? And that was I shared that because that's what the ZoidPay community shared with me. Multiple people stated this, and I think that they thought that that was going to be a bullish response, like, oh yeah, I mean, the volume is getting increased because of this centralized exchange listing. But then that brought up a point for me of like, is that really what ZoidPay is doing? And if so, is that honest? Even though everybody does it, everybody manipulates volume. If you have to break the rules to compete with other people breaking the rules, to me doesn't I mean, to me, and hopefully to you as well, that doesn't make breaking rules okay. So I will just say, to close this, I'm very happy not only that Edward finally let us know what was going on with this volume. I hope that the ZoidPay team takes that and sees that as an opportunity to, yeah, be a little bit more aware that people like myself and others are watching the markets and we're analyzing these and we're going to share observations. So before you just start to enact tests, maybe consider doing it on a dev net rather than in the real world with real money. Just a better communication would be a little bit better in the future. But altogether, if anybody is a fan of ZoidPay or anybody on the ZoidPay team is following this, I'm sorry for what I posted about the volume from a standpoint of how I framed it. I'm always going to share my observations, but I think that I should have been more careful with basically spreading rumors, which started in the replies when I first questioned this. I mean, it just really fueled some unhealthy dialogue, and some people are saying that I alienated ZoidPay from the MultiversX community, which I think is being way dramatic. It's like, what do you mean? Like, we all grow, we all move and try to improve. So this is in the past, and I'm very excited to see a clean breakout on what we should assume is real trading volume, rather than before this is all being aggregated by something going on in the background. But these days, it seems as though the bullish news from ZoidPay is basically coming out, and we're all anticipating a tier one centralized exchange listing. Not sure if this is going to have positive implications after the list, or what exactly will come of this, but I think that long term, the perspective on ZoidPay is bullish. And then just ending this look at this ZoidPay chart with the 3-day view, just very positive movements. And and also considering what we covered in the Bitcoin analysis, considering that this area of consolidation, though it did have previous or a few areas of support, it did eventually break. So this level that we are at right now is an area of resistance. So we first attacked that as resistance back here in November, which this was actually the price increase whenever Edward announced the $75 million of funding. So that was resistance. Again, a little bit of resistance from that same region. And then now for a third time, resistance led us to downturn, some reaccumulation, and now price is moving with volume very bullishly at these previous levels of resistance turned, I'm sorry, support turned resistance, resistance. So basically, whenever we're knocking on the door of that resistance, that's going to be a pretty pivotal point if price is able to break up and out of that region. So if this area of what is right now resistance breaks out, I think that that's going to be a very powerful move. Considering all of the bullish elements of ZoidPay, I am inclined to believe that this is going to be a bullish trend change that is really taking shape. So with that, I'm going to give a clear disclaimer before we move on here, that what you're about to see is far from financial advice. It's never been farther from financial advice if you're hearing it from me, because I'm going to show you, based off of this analysis, what I felt was a good idea. So please take the following with a grain of salt. Practice risk tolerance. But I wanted to basically leverage what I believe is a bullish move on ZoidPay. So I was able to come over to Jewelswap, and Jewelswap is a brand new, it is DeFi. It is a DeFi platform on MultiversX, and I think that so Jewelswap allows you to lend, or rather it allows you to borrow e-gold using your NFTs as collateral. So that to me is extremely powerful, considering how many NFTs I've purchased over the past year, and especially considering the Zoidster NFTs. I own many Zoidster NFTs, and I have some of them boosting my shopping pool on ZoidPay's platform, but I can't do anything with them beyond that. So the fact that Jewelswap has come along and has given people the opportunity to use their NFTs that are just sitting in their wallet and use them as collateral, to me that is very exciting, very powerful. And I want to show you what I did, but before that, I want to just come over here very quickly. You can either lend e-gold or you can borrow e-gold. So what I did was I borrowed Eagled, and I can't do that over on my Zoidsters because I already using all of them as collateral. So I'm gonna click on Drifters. I have many more drifters than this, but all of them are staking on Drifters staking platform. So shout out drifters, but also opportunity for many different NFT projects within MultiversX. They need to find a way for people to stake their NFTs like I am on the drifters staking platform. But I also, that'd be pretty cool if I could use them as collateral. But I mean, just coming to think of it, I don't think that that would be permissible, since the drifters right now are earning me the AEV token, which is dark matter, which is all into drifters stuff that of course we won't get into right now. But I guess all that to say, I'm not certain that it's actually possible. There is an idea that the digital representation of an NFT should still be in your wallet, even whenever it is deposited into a staking program, whether it be drifters or whether it be Elrond apes as well. I have many Elrond apes, but as you can see, none of them are here. So I'm not actually concerned about that, as I came to the realization on camera with you that you're giving these as collateral. So if I have my Elrond ape staked and I use it as collateral, and then I lose that Elrond 8 because I don't pay back my loan, that there's no smart contract that gives Jewelswap the right to basically unstake the physical digital physical Elrond ape in staking. So I think that while there does need to be some sort of representation of NFTs within your wallet and when they are staking, I think that it cannot be used as collateral in this way. So there's an opportunity. Hopefully, we see some growth in that conversation. But for now, I just want to give you a quick little example. I'll use one of my Bored Ape X Club NFTs as an example of how to give these up for collateral. On the right hand side, you can see all of the different NFTs that are being allowed to use as collateral. I'm just going to do one of these Bored Ape NFTs. I like that cigar on that one, so I'm going to do this guy just in case I forget to pay it back or something like that. So you can, let me go back really quickly because you can actually, so clicking borrow eagled up here, you can either do one or you can actually do multiple. You can bulk borrow. I have 4 selected right now, so you can bulk borrow eagled based off of these NFTs. But I'm just going to do one just for this video. And then I'm going to show you what I did with my Zoidsters, which I already said it many times. I don't really have to show you, but I borrowed a bunch of eagled using all of my Zoidsters as collateral. So after you click on the NFT that you want, you can come over here and you can just say how many days you want to borrow it. 1 day, 3 days, 7 or 16 days. Last I was on here, they did not have a 16 day option, so that's great to see that. Yeah, I'm just gonna go ahead and I'll do this as 16 days, just because actually no, I'm not, because I don't want to do interest. I don't really care about this. I'm not actually I'm just doing this as an example. I'm not borrowing eagled to try to trade it to try to make profits, etc. I'm just doing this as an example. I'm going to go ahead and borrow the max. You can use it as collateral, but you can actually put in the amount that you want to borrow. You don't have to borrow all of it. But yeah, I mean, this platform is super simple. All of the information is clearly displayed for you. Repayment deadline on the 19th, which is tomorrow. At the interest rate, a loan amount, borrow amount, all that good stuff. And then quickly press borrow, which I'm not going to sign into that just because I don't want to. You get the idea. It's very easy. But I do want to show you my loans. As I said, very bullish on ZoidPay. It seems like they have a lot in the pipeline. It might be a ZoidPay summer. So I took a 14-day loan on all of my Zoidsters, aside from the ones that are in my shopping pools. So I have borrowed over 120 e-gold from all of my Zoidsters that were once just sitting on my wallet doing nothing. Now I have them. This is very risky. This is why I don't encourage people to do this. But I have them on Jewelswap, and will try to make some profit based off of this loan, so that I can come in and I can redeem it, and basically I will have made money based off of some trades. So fingers crossed that that works out. Fingers crossed that the ZoidPay token does not drop heavily from here, which again, I mean, I told you guys the fear of buying whenever the price starts to go higher. So the fact that I executed this action after the ZoidPay has grown 60%, honestly, this is a pretty stupid trade. Pretty ignorant. I don't think that it was very intelligent altogether. But we'll see. If things start to reverse, I might go back on my stance. But altogether, yeah, I figured I would just give it a go. Try out Jewelswap, and I'm so bullish on what I see forming in the ZoidPay ecosystem that I figured I would just put some leverage behind it. So, again, not a very wise move, objectively speaking, but it's fun to gamble every once in a while. And I've said it in previous videos, and I'll say it in closing here, that while I advise, I non-financial advise, while I encourage people to just buy and hold dollar cost average, all these things that I've mentioned many times before, um, I think that if you want to, kind of feel that scratch, or feel that feeling that you want to trade, or you want to gamble, you want to have some of that excitement in your trading world, by all means. But seriously consider the percentage of your portfolio that you are exposing to that risk, that inherent risk of trading. So have maybe a percentage, a small percentage of your overall portfolio that you use for trading and doing kind of things like I just did. Even though 126 e-gold is by no means small, that right now is totaling over $5,000. So honestly, I'm being a little bit stupid right now, and just I don't know why I'm doing this, because buying and holding is a solid strategy, and it's not stressful. I mean, I'm not stressed by what I did. I did it because I'm confident. But let's see where I am. I've got over 2 weeks for price to move, and I feel pretty confident about that. So I'll be interested to see, and that'll give me reasons to readdress ZoidPay in the future. I mean, it's pretty. There's a lot on the line right now, because if the price of ZPay against Eagle starts to go down, my Zoidsters are at risk, and the ZoidPay that I purchased with my Zoidsters because I borrowed is also at risk of being depleted, should the market go in the opposite direction. So that's all I've got for you today's video. Thank you so much for watching. I really hope that this was valuable for you, and please leave me some replies in the comments as always. Let me know if there are some tools that you like and you use often in your trading or in your NFTs. There's a lot for us to expand on these videos. I already mentioned many different video ideas. But altogether, I'm excited for this journey, and excited to have a platform here where I'm speaking directly to my audience, rather than the podcast show that I have is with Alec. So that's much more conversational and comparing ideas, and giving different perspectives. But give me a follow on Twitter, and you'll see that I'm pretty bullish on cryptocurrency and MultiversX. There's no hiding that. But yeah, thank you so much for watching this video. Please share this online, like, comment, subscribe. Let me know you're here. Appreciate all of you. Thank you for your support, and I'll catch you in the next one. Economistic out of here. Peace.